Okay guys, Saturday the 24th of March. So we're going to have a look at our US indexes. As always, we're going to recap both the E-Mini SP 500 and NASDAQ in relation to last Sunday's analysis, and then we're going to move on to looking at the markets for the trading week ahead in terms of day trading. Okay, so it's been a really busy week at Decisive Trading. Actually got lots of cool things coming over the next couple of months. Hopefully it's going to benefit a lot of you guys. So, S&P 500. Let's get started. This market, what we went over last week was how we were potentially getting a bit of a price squeeze with an ascending triangle. We tested, we then had resistance, and we had resistance. The market was pressing up into the squeeze of this triangle. What we went over last week was how if we start breaking down from these sloping support areas, it's potentially giving us that sign that the market is turning bearish. We then expect the move down to at least this 2696 to 2690 level. And then if we started breaking down below both of these levels, so 2680 to 2675, we were then expecting a stronger correction on the S&P, and that's exactly what we've seen. So coming into the start of the week on the Monday, we broke down. Where did the market come down to? Our 2696 to 2690 level, where we found support. The market shot back up. On the Tuesday, we had a little bit of a pause day, a doji candle, which is confirming the breakdown below sloping support, which is now resistance. On the Wednesday, we spiked back up. What did we do? We tested at our sloping resistance level, and the market started its wave down. So coming into next week now, what are we looking at? Well, first of all, the S&P remains bearish. Now we're back down at pretty much what I would call last sort of, the last main levels of support on this market. If we're not going to have a much stronger correction, really we need to start seeing the S&P finding support at these levels. If not, really the market's coming down to at least the 2500 level and likely down toward 2480. That's if we really start failing at these levels that we're going to go over next. Now we do have a little bit of support here. We've had two very strong spikes at these levels, but if we start breaking down again, there's a real potential here that these spikes aren't going to hold this level of support, and it's going to be coming down to this whole area right here. But at present, we are testing at some pretty good support levels, so let's have a look. We've got one at 2596 down to, let's have a look here. It's really all one zone, down to 2580. So what we're doing is we're basically looking where the buyers previously stepped in. Spike down here, spike down here. The close and the open of these candles, they both held in the zone before we pressed up. If we look to our left, we've got previous structure right here. The market is now coming back down to test. The buyers have already stepped in a relatively small way as yet, but coming into next week, this remains a good level of potential support. Down below there, really for me, this is the last sort of the last key support, 2565 down to really 2555. Now we have a couple of spikes down here that we're going to make into a support zone down here also. But this level right here for me is the last sort of key level of support right here. Now also, if we're breaking down below this level, it's worthwhile then looking for potential resistance. So the break below, the pullback, and the move down into this zone down below. Down below there, we have 2543 all the way down to 2530. So this level right here is where the market held when we had that very strong impulsive move down. It is still a level of support to watch. However, as I've mentioned, if we do start breaking down below these levels, really this level, to be honest, it's a sign that certainly longer term, doesn't mean it's all going to happen in 1 week. Medium to long term, this market is potentially then coming down toward this 2506 level. Now we have had a very strong move down, so there is the potential now for some sort of a pullback. And what we've done is, on the way down, we've created a level of, a swing, and a swing that we've then broken down below. So when you see this happening, especially if a market's moving into some sort of a downtrend, you very often see sellers stepping back in at these levels if we see the press back up. Because right now, you've got to think about it. If you're selling into this market, it's the same as if you're buying on the way up. If you're selling into this market, you're now selling at the lows. You've had a very strong sell-off all the way down 215 points. And you always hear the phrase, don't buy at the highs, don't sell at the lows. You're always looking for value. So if a market is pressing higher, this is why you often see pullbacks like this before the buyers step back in. Because buyers don't want to keep buying as the market is rallying higher. It's like paying top dollar for something. And then people who have bought, they start taking profits, and the market comes down, it comes down, it comes down. People are taking profits, the buyers are holding off, and then the buyers start stepping back in. We start pressing up again, then it happens again. Then we press up again, then it happens again. And this really was a very strong move up. So as this was happening, we went over multiple times how, because of this, when the correction came, it was very likely going to be extremely powerful. And that's exactly what happened. So down here, we have key levels. Up above, really, these zones where they're sitting right now. So 2696 to 2690, and then 2680 to 2675. We're going to move this one up ever so slightly toward sort of 2685. If we see the market pulling back, very key resistance. Very key resistance. Down below there, we have 266, around about 2665, down to, let's have a look here. Probably going to split these zones somewhat. So we're going to have one down to 2647 right here. So really, for me, these two here are very key resistance on the way back up. This one is a little bit more minor, but still worth watching. If we're breaking up above this one also, it starts to become a little bit worthwhile looking for buys that would be counter trend, but back up into these levels. Down below there, we have 2640 down to, really the whole way down, 2622. Now on the way down here, I was really watching to see if we held at these levels, because this was a pretty strong level of potential support. And the fact that we've broken through here so strongly, it's indicative that the market is, in the medium term, still going to continue this bearish move. Doesn't mean we're not going to see bullish rallies. The market next week can just rally the whole way back up here, the whole week. But medium to longer term, it's still bearish until we start to see that evidence that it is turning bullish. And for that to happen, we'd need to start breaking up above at least these levels right here. So coming into next week, as I've mentioned, key support, key support. If we're breaking down below, resistance for the potential moves down. If we're breaking down below this one, certainly resistance for the move down into this zone, which is support. But really, if we're breaking down below here, I'd then expect the move down to 2500. Up above, we have resistance, resistance, and then very key resistance at both of these levels. Okay, guys, that's everything for the S&P. Let's move on to the NASDAQ. Okay guys, so let's now do the exact same thing for the NASDAQ. So with the NASDAQ, we went over last week how again we were putting in a squeeze, a little bit of a different squeeze with this one, following a trend line of support, starting to squeeze with the previous highs, coming into a triangle. And then we went over last week how we would be testing at the sloping support level right here, coming into Monday. And if we start to see the breaks down below this level, we're then expecting to move down into 6940 to 6910, and then 6900 to 6875. So the markets came down. You can see for a couple of days it was holding at the levels. It's actually rejecting off of the upper band once and twice, and then the lower band on the Thursday. What we went over is if we break down below this level, we're coming down to 6822 to 6795. On the Monday, we came all the way down, tested our support before we found the bounce, and then we held at these levels for a couple of days before finding resistance. We went over how if we break down below this level and then 65 also, market's turning more bearish. And we had a very strong move down on this market also. So coming into next week, what are we looking at? Let's get rid of some of these arrows first of all. Okay, so we have again up above some nice levels of resistance now. We've already tested at this level once, so 67, around about 6720, really down to, I want to make sure we get this right, so let's have a look. I've got one here, I've got one here, 6675, right here. I've actually already tested it on the Friday. Key resistance, if we see the market pressing back up. Down below there, we have another one at around about 6645 down into 6618 right here. Key resistance, if we see the market bouncing up. Now, if we start breaking up above this level at 6720, we have a little spike down here at around about 6740 we want to be careful of right here, but really I'd then be expecting a bounce back toward 6795, 6822 up at these key levels, which again would become key resistance. So look for the bears stepping back in on the wave up and pressing the market down. Let's have a look here. So down below, very key support. Let's do that first. Really, it's 6440 all the way up to, we could bring it up to, let's keep it with the key levels. So let's take it to 6475 right here. Now we're taking the market holding at these levels, spiking up, holding at these levels, spiking down, finding buyers before driving the market higher. If we're coming down, that remains a very good level of potential support. If we're breaking down below this level, let's make it a little bit lower. If we're breaking down below 6423, so 6476, 6423. If we're breaking down below that level now, again, it's good to look for stronger corrections, at least down into the MA200 moving average. Very often, you can see it back here, you see reactions off of the MA200 on the daily time frame. I'd be expecting to see at least that tested, but really I'd then be expecting to see 6310 to 6300 tested. So here, really all the way down to here. So 6254, 6311 right here, which again is very key support. If we're breaking down below that level, then really the NASDAQ's in a little bit more trouble. Really, I'd be expecting to see at least 6120, but really I'd be expecting to see the round number 6,000. That would be in the medium term if we start breaking down below that level. But at present, we have key support, we have key support. If we're breaking down below, looking for the resistance, the moves to the MA200 or this level down here. Up above, resistance levels, all of them really on a wave back up now to look for potential continuation. Down below there, we're holding at this previous swing point right here. For me personally, I don't really want to put too many zones in here because it's for me it's fairly minor. So I'm going to put one at 6575 down to 6552. I'm going to say that's a more minor zone in between. Really the main ones are here and here for potential support. If we break down below resistance, definitely. Up above, resistance, resistance, resistance. If we break up above, support for potential stronger bounces, and then again resistance coming into the market until we start to get clear evidence that the market is turning more bullish once again. Happy to look for that on the moves back up. Potentially if we get above this one also, 6645. Again, those bullish bounces up into the zone up above. This one here for me is definitely more minor. Okay guys, that's everything for this week. As always, I hope you found that helpful. Hope you all have a great trading week next week. I'm James Orr and thank you.